The Philippine economy has exceeded expectations by growing at a faster than expected pace in the first quarter of 2023. This growth was driven by resilient post-pandemic demand, which helped defy elevated inflation and the central bank's aggressive monetary tightening. The country's gross domestic product, GDP, grew by 6.4% in the first quarter of 2023, beating market expectations of 6.2%. This was higher than the 5.9% growth recorded in the same period last year. The services sector was the main driver of growth, expanding by 7.1% year-on-year. The industry sector also grew by 6.2%, while agriculture expanded by 3.8%. Despite the strong growth, there are still concerns about inflation and rising prices of goods. The International Monetary Fund, IMF, has kept its economic growth forecast for the Philippines this year at 6.0%, but said that high inflation was a downside risk. The Philippine economy has been growing at a faster than expected pace in recent years. With its young population, strong consumer demand, robust remittances, and infrastructure development program, it is poised to remain strong in the coming years. The Philippines is a country that has been blessed with abundant natural resources and a hard-working population. But did you know that the country also has a lot of foreign reserves? The Philippine Central Bank is responsible for managing the country's foreign reserves. These reserves are made up of foreign assets held or controlled by the bank. As of March 2023, the Philippines' foreign exchange reserves were measured at $86.9 billion US$1. This is an increase from the previous month's $84.3 billion US. So what does this mean for the Philippines? Having a lot of foreign reserves means that the country has enough money to pay for its imports and debts. It also means that it can protect itself from economic shocks and volatility in the global market. One of the reasons why the Philippine Central Bank accumulates reserves is to maintain the international stability and convertibility of the Philippine peso too. During periods of exchange market pressure or when the local currency is under attack, the bank normally provides liquidity to the market settled via spot or NDFs. In addition, gross international reserves are held to ensure that a central bank has backup funds if the national currency rapidly depreciates. The central bank uses reserves to stabilize the currency. The country's gross international reserves are expected to recover in the coming months with the help of higher remittances from overseas Filipino workers, tourism, and business process outsourcing revenues. In conclusion, having a lot of foreign reserves is important for any country. It helps protect against economic shocks and ensures that there is enough money to pay for imports and debts. The Philippines' foreign reserves are an important part of its economy and will continue to play a vital role in its growth. The Philippine economy is one of the most dynamic economies in the East Asia and Pacific Region 1. It is transitioning from one based on agriculture to one based more on services and manufacturing. The country has experienced significant economic growth and transformation in recent years. One of the reasons for this growth is the country's young population. With increasing urbanization, a growing middle class, and a large and young population, the Philippines' economic dynamism is rooted in strong consumer demand supported by a vibrant labor market and robust remittances. The country has also been investing heavily in infrastructure development. In addition, the country has been attracting foreign investors. The Philippines has been ranked as one of the top destinations for foreign direct investment, FDI, in Southeast Asia. The government has been implementing policies to make it easier for foreign investors to do business in the country. In conclusion, the Philippine economy is a growing powerhouse with a lot of potential for further growth. With its young population, strong consumer demand, robust remittances, and infrastructure development program, it is poised to remain strong in the coming years.